So assuming that it's a Sdn Bhd or partnership, right, or even a sole proprietor, a single business owner selling on Shopee or Lazada, right, e-commerce platform, they want to get a loan for their business, but definitely banks won't be able to provide, and it's a new business, right? What we do is we don't, because the business is new, we evaluate the person behind the company. So let's say it's Mr. A lah, right? So we will look into Mr. A's credit. So he might have a housing loan, he might have a credit card, he might have a car loan, right? So we look into that credit and then we will evaluate based on that.
Welcome to the Getting Funded MY podcast by iSearch. Today we have Kelvin, the CEO of Fundaztic, on the show. So Fundaztic is a registered peer-to-peer financing platform. Today I'll be discussing with Kelvin on how SMEs can raise funds via peer-to-peer financing. So welcome to the show, Kelvin.
Hi, Benjamin. Thanks.
Alright, so let's begin. So could you share with us, most people would not know what is peer-to-peer financing?
So let me just start from the beginning of times, in Malaysia. Please. So peer-to-peer financing, or P2P in short, right? It's actually, like you mentioned, a regulated industry in Malaysia. So back in 2016, mid-2016, the Securities Commission, which is one of the financial regulatory body, announced that they were giving out a license for P2P. And at the time, so Fundaztic was one of the applicants, along with about 50 over applicants for the P2P license. And then in November 2016, the SC announced 6 licenses, and Fundaztic was one of the 6 licenses that was awarded P2P. Now, what is P2P? So P2P is, in short, crowdfunding platform. So you have many different types of crowdfunding platforms, right? You have your rewards-based, your charity-based, right, like Kickstarter, Indiegogo. So you roughly know what kind of crowdfunding I'm talking about. And then they have a bit more regulated crowdfunding, like equity crowdfunding and P2P financing, P2P crowdfunding, right? So the big difference between P2P and the rest is the funders, they are funding the debt of a person or a company or a business. Okay, for example, Kickstarter, right? A business that who has been making, let's say, phone covers, right? It's an innovative phone cover and they want to commercialize. So they go to Kickstarter or Indiegogo and say, hey, look, this is my prototype. If you pledge X amount of money, if we hit our funding goal, I will be able to commercialize. You were able to be rewarded with the phone cover, right? So in return, the investors get back that product that they fund. So for P2P, let's take for example a business, right? A business SME in Malaysia who needs funding, but they are maybe too small, or the industry they're in are not under the bank's radar, so they can't get a loan from the bank. So P2P is an alternative option for them to then raise or request for some financing, right? But the difference between the banks and us is the financing, the money is coming from the public or the people or the crowd, right? So it's many people. It can be 5, 10, 20, hundreds, thousands of people crowdfunding into a debt of a single person or single SME business. In Malaysia, under the SC regulations, only SMEs can be the borrowers, right? So only SMEs can apply for funding via P2P. And we call them issuers because they are sort of issuing like a note or a bond to the investors, and the funders are investors, and they are actually investing into the note of these SMEs. So it's like a promissory note, like an IOU, right? So that's the whole concept of P2P. So Fundaztic is like the platform, the middle person or the middle platform, where it connects both the SMEs who are looking for funding together with the public or the investors or the people of Malaysia. That's sort of the gist of P2P, or peer-to-peer financing. In terms of the platform itself, Fundaztic, we do all the operation stuff, all the credit stuff. So we evaluate the SMEs when they come and apply. We do our KYC, our due diligence, right? And then if it's approved, we will then sort of list or host them onto our platform, where then our members who are investors, registered members, can actually view all these SMEs who are looking for funding, right? And then they can see the risk, the interest rate. Oh yeah, I want to say, so the return they get from the investors is the interest, right? They have to pay back by interest. So it's similar to a loan. So they can view the rates, the risk, and then they can view the business plan, basically what the business do, why are they looking for funding, things like that. And then they take the conscious decision to then decide how much they want to fund, if they want to fund the specific SME.
Okay, sounds interesting. What is the typical repayment period that the SMEs have to return back the money?
Okay, so as an industry, the repayment period varies, right? So just to share with you, Fundaztic repayment period, our general product is more like a working capital term financing or term loan product. So it's sort of like a medium term, between 6 months to 36 months or 3 years repayment period. And the loan structure is similar to like a car loan for individual or a term loan for business, where it's a fixed monthly repayment, fixed amount every month, principal and interest portion. But there are other platforms, other P2P platforms. Currently, there are 11 registered or 11 licensed operators in Malaysia. So different platforms sort of have different target segments in terms of SMEs and different type of products. So there are some that are providing more like invoice financing, where it's much quicker, like 3 months, 2 months, 6 months kind of tenure, and it's more based on the invoice of the SME. And then that one, normally the repayment is a bullet repayment or one-off repayment at the end of the tenure. Yeah.
Mm,
So Fundastic
okay,
is more on the working capital term financing part.
I see. So what are the advantages of P2P financing if you want to compare with, say, VC or banks?
Good question. So it's a bit different. Maybe not advantage yet, but depends on at what stage a business is at and what are they looking for. Right. Of course, if it's more of an ideation stage, prototype stage, then probably these businesses are looking for more of equity type of funding. Right. They need to raise funds through VCs, PEs, or even equity crowdfunding, which is another industry. There is a crowdfunding platform, but it's you are actually giving equity to the crowdfunders. So that's equity based, right? For the really new startups, all those businesses that I've already is running. It can be very new, it can be 3 months, 6 months, but it's already running. So this sort of getting some sort of revenue. Then instead of diluting their equity, diluting their shares, then probably they want more capital. They have to go through financing, right? Either through the banks or platforms like us. So maybe the difference between the banks and us is that P2P being an online platform, a fintech platform, firstly, we are much quicker and we are fully online, right? So it means SMEs can just register and apply for financing from the comforts of their home or office. All our SMEs, all our issuers or customers, SME customers, we do not require to meet them face to face, right? All the documents are also uploaded via our app or our website. Most of the time when we deal with them is either via email or through phone call. Everything is much quicker. So just to give you an example, an SME who's applying for let's say 100,000 ringgit loan, right? They register on our platform, and then when they apply, they will receive the results of the application, whether it's approved or rejected, within 10 minutes after the application. The reason why it's so fast is because as a platform, we are also directly linked to the credit bureaus or credit rating agencies, like CITOS and SICRIS, right? So once they apply, as long as there's internet connection, as long as all our servers are up, Bandagara servers up, CITOS servers up, our server is up, which is 99% of the time, our system actually via API pulls the reports from these bureaus already. And there's an algorithm in our system that will read through their credit history, their credit record, the CITOS score, the SICRIS, and then determine if the business the application is approved or rejected. Yeah, so advantage,
Okay.
yeah, that's speed, right? Second one is for P2P. The reason why the SC actually gave out this license is mainly to close the gap to financing for SMEs. There's about, maybe not today, but before the COVID, there was about almost 1 million SMEs in Malaysia, right? And about 80% of them are actually the micro and small SMEs. And majority of these SMEs are the underserved SMEs. That means that they currently, before P2P, they weren't able to get financing or loans from banks, because not because they are bad in terms of credit, just because either the loan size is too small, because banks being banks, they have, their overheads are very high. So instead of a 50,000 loan compared to a $1 million loan, both of this loan takes the same effort, takes the same sort of, need to go through the same process. So they rather do the bigger ticket size, right? So it's much more profitable for them. So because of that, those smaller SMEs or micro SMEs are being left out. So we are here to actually close the gap to provide financing solution for this type of SMEs, right? So for SMEs who are currently, your mom and pop shop, your cafes, down the road, your workshops down the road, who previously, in order to raise funds or get some funding, they need to borrow from friends, family, or via credit card. Now they have an alternative option via P2P.
Okay. So for SMEs who are interested in this P2P financing, how can they increase their chances to secure this funding?
Firstly, because it's still a financing product, right? So when it comes to financing, you have to have a good or healthy history of credit background, not both the business and also the personal. So what we do for Fundaztic, we look into not just the business in terms of the credit, but also the people behind the business, the owners behind the business, right? So as long as their CTOS, CCRIs, they're all clean, they're all healthy. What I mean is that if they have a credit card or a housing loan or car loan and they're paying it on time, chances of them being approved is quite high. So it's just that actually basically for Fundaztic, right? Different platforms have the different ways of evaluating their customers. For Fundaztic, we look into credit, and as long as their credit is healthy, chances of them being approved is pretty high.
Do you look into their sales and profits?
That will be on a case-by-case basis, right? Of course, now just to share with current times, right? Pandemic, businesses are closed, things like that. So we do take a closer look in terms of their financials or their sales and turnovers, but not across the board. That is not really our business model. So once the market, what I'm saying is that once the market reopens, when businesses are back to normal, everything is back to normal, financial is not really something that we will look at for Fundaztic. The reason why also is because the target segments that we are working with in terms of SMEs, right? The small micro SMEs, which financials don't really reflect the true credit worthiness of the business. Very simple. Sometimes you may have some friends who they have a lot of money, right? They have a lot of money, and every time you go for dinner, if you pay on behalf of them, they will take forever to pay you back, right? But you know that they have money. So what I'm saying is that we look into a more behavioral type of evaluation. So we see that as long as they are very good paymasters, right, and likelihood of them paying, because our loan size is so very small, on average is less than 100,000 ringgit, so it's a small loan. So for them to pay this sort of small finance monthly commitment, chances of them paying is pretty high, as long as their credit behavior is good.
In that case, can I say that startups have a lower chance to get this P2P financing, whereas a more established SME, because more established SMEs, they have previous records of repayment of all the credit terms, whereas a new startup is harder to raise funds?
Good question. So, yes and no. I believe a lot of P2P platforms, most P2P platforms, they do require some sort of track record, like 12 months minimum track record. But for Fundaztic, actually, we do allow startups to apply. The reason why is because, as I mentioned earlier, we don't only look into the credit of the business, but also the people behind the company. So assuming that it's a Seremba Hut or partnership, right, or even a sole proprietor, a single business owner selling on Shopee or Lazada, right, e-commerce platform, they want to get a loan for their business, but definitely banks won't be able to provide. And it's a new business, right? What we do is we don't, because the business is new, we evaluate the person behind the company. So let's say it's Mr. A lah, right? So we will look into Mr. A's credit. So he might have a housing loan, he might have a credit card, he might have a car loan, right? So we look into that credit and then we will evaluate based on that.
Okay, got it. I think it's very clear now for the SME side. For SMEs who wish to raise funds, how do they go about it? But what about the investors? Let's say investors wish to invest in this Fundaztic platform. Would they be able to, given a list of, say, 100 SMEs, and then they can evaluate one by one? How can they pick the best choice to invest and not lose money?
For Fundaztic, we are the market leader in terms of the number of SMEs served in the industry, right? We take about 50% market share in terms of the number of unique SMEs in the P2P industry. We've already got about over 2,000 SMEs since we started back in July 2017. And because our target SMEs are the micro and small, just to share with you, to be very transparent, if you invest in 1, 2, 5, 10 SMEs in this size, the risk is very, very high, especially it's unsecured. It's not it's uncollateralized financing, right? So what I'm saying is that the best way or the only way to really mitigate the risk is by volume, by diversifying your investment across as many SMEs as possible, right? Don't really cherry pick don't put so much. I mean, of course, when we publish SMEs or host SMEs onto our platform, we host our average around 10 to 15 a week. You'll be able to see their businesses and things like that, right? What I'm saying is that investors shouldn't just, oh, I really like this business, or this company. I feel like this industry is very strong, so they put a lot of money in that. Right? Let's say, for example, this investor invested 10,000 in this SME, right? But the other other SMEs, they invest only like 500 ringgit or 100 ringgit, right? So that is very risky, because if that 10,000 ringgit SME suddenly default, then the other SMEs repayment won't be able to cover the loss. Where if you have spread equally across, like 100, 200, 300 SMEs, even if it's a 5%, 10 of them, 20 of them, 30 of them default at a different stage, you will still earn a healthy double figure return. Right? I'll talk about the interest rates later. Right? So in terms of the strategy, is just really diversified. Maybe to put it simple, put yourself now as a bank giving credit cards. Right? So a bank give 10 credit cards or 20 credit cards, or a bank that has only 20 credit cards customers or 30 credit cards customers is very risky, because anyone can just swipe credit card and don't pay, and then the bank lose money, right? But the big banks, they are giving thousands, hundreds of thousands of credit cards, so they are already diversified, right? So even though the credit card is very similar, the credit limits around 20, 30,000, it's unsecured. So even if few customers or tens or hundreds of customers default in their credit card, the banks are still earning a lot of money because of the 18% interest rate charge. Right? So similar here, right? Similar to Fundaztic, our interest rate, flat rate is around 12% per annum. Effective rate is around 20 to 22%, effective rate. So the interest rate is actually pretty attractive for investors.
So let's say if I have 10K and I wish to invest in the Fundaztic platform, does it mean that this 10K can be spread across 100 to 200 SMEs?
Yeah. So our minimum investment per SME or per node is 50 ringgit. So if you have 10K, then you can invest in 200. If it's 50 ringgit per SME, then you can spread this 10K to at least 200 SMEs. It will be more, because when you build these 200 SMEs, as I mentioned, we publish around 10 to 15 a week, right? So 200 SMEs will probably take. Of course, we're growing. Hopefully, with the market reopening, we'll probably do, instead of 10, 15, to 20 to 25 per week, right? So you're probably able to achieve 200 within 6 months or less, okay? But upon these 6 months, every month, the SMEs that you have invested or lent since day one are already starting to repay you your principal and interest. So you can use this repayment to actually roll or compound even more. So this is another strategy for investors, the compounding effect for P2P, because every month you're getting back principal and interest. This money, of course, we advise not to withdraw. You can withdraw if you want. Investors can withdraw if you want, but we always advise to take these repayments and reinvest again. So you just keep rolling your repayments. Eventually, when you roll, over 2, 3, 4 years, you realize that you don't even need to put in fresh cash anymore. Every month when the SMEs are repaying you back, you just use this money to roll and earn more returns. So that's basically the strategy as well. So with 10K, you can at least invest in about 200 SMEs.
And do the investors pick all 200 SMEs, or the investor can say, Fundaztic, you just pick for me 200 SMEs?
Yeah. So there's two ways, right? Two ways. So investors can by themselves every week when we publish or host new notes, new SMEs, they can go through and read through. Of course, what we do is the day before we publish or host the new SMEs, we will actually send an email out to our investors to give them what's basically like a catalog, what's coming up next, the risk and the business and things like that, so they can already decide beforehand. But we also have this feature called the Smart Invest feature, which is an auto investment feature where, like for example, you said you have 10,000, you put in 10,000, you set your criteria like the range of interest rate you want, the range of risk type of businesses you want, things like that. And then as long as the SMEs that we approve meets those criteria, the system will automatically invest for you based on the amount that you select or that you key in. Yeah. So that's the auto invest feature as well. So I mean, Fundaztic have a lot of different features as well. Like we also have a principal protect feature where we sort of guarantee the principal of our investors as long as they are diversified, right? Because since day one, we've always said you need to diversify your investment. So what we did was, if investors follow our strategy, right, if even after following the strategy and then you eventually lose money, we will actually guarantee the principal up to a certain limit. All the terms and conditions are on the website. Yeah.
Okay. I mean, terms and conditions, we will, of course, will own self have to look into terms and conditions. But just to confirm what you're saying is that, let's say if I put 10K and I follow Fundaztic recommended strategy, but in the end of the repayment period, the money has, let's say I dropped to 8K. Does it mean that you guarantee the top up
10K.
the 2K?
Yeah,
or is it?
We'll top up the 2K for you. Yeah.
All right. Subject to terms and conditions. Of course, this one, you guys have to own self read it and.
Yeah, but it's not very, it's not complicated as long as, like what I mentioned briefly, what I said, you just invest equally across at least 100 SMEs. As long as you build a portfolio of at least 100 SMEs, then that 10K will be guaranteed by us.
100 means 100 times 50, because 50 you mentioned the minimum, right? So 5K minimum, then you will guarantee the principal amount.
That's correct, yeah. In a way, that's correct, yeah.
Okay. All right. This is really interesting because I mean, previously, the podcast that we always talk about is always about VC funding or ECF. So I guess you're like the first one that gives us a very fresh new idea on P2P financing.
Yeah.
So really thank you for that.
No worries. I guess P2P is not very new. I think it's already almost 5 years old in Malaysia. It's just that it's still very unheard of. We're still barely scratching the surface, I guess. So hopefully this podcast as well will...
Because we don't see much ads on P2P.
Yeah, that's right.
We don't see much people say that, I just raised 100K from P2P, why not you try this? We rarely hear these type of things.
Yeah, because P2P you don't get the VCs where it's like 10 million, 20 million, 30 million, 100 million, right? So that one you can shout, but you're talking about small SMEs who are just taking 100,000, 200,000 for their day-to-day operations, for their working capital. So for them it's like, and these are all your mom and pop shops, right? They might be too busy running their business than like shouting about helping. Of course, we as a platform, we also reach out to those selected ones. We ask for testimonials and we try to share that and publish that as well. But the industry is still new. I guess hopefully with this whole COVID situation, everyone is being more adaptable to using digital platforms. So hopefully by this past 18 months, it will accelerate the take-up or the adoption of P2P.
Yeah, I think what very interesting point is that, because like you say, 18 months of pandemic. So I'm just wondering, like the past 18 months, what kind of business is doing like very well after borrowing the money from Fundaztic?
Online businesses, definitely. When I say online businesses, means even traditional retail businesses that pivot to online businesses. Right? So we have customers who previously was doing offline sales. Most of our customers are retail and services customers, right? So offline sales or offline services, then they move it online. So these are the type of business we see that even through the pandemic, either they are maintaining or they're even growing better because they realize that once you shift online, you get to save more costs, things like that. Right? But that's what I mean by the past 18 months, there are some people, it sort of forced people who, maybe not our generation, but maybe the slightly older ones who have never looked into using technology to run their business, right? To then, unfortunately, they had no choice, so they then move to e-commerce or B2B commerce, things like that, for their business and actually sort of help them.
All right. So to wrap up, is there anything else that you would like to share with the audience?
I mean, whoever's listening, whoever is not familiar with P2P, definitely you can just go to fundaztic.com. We have a live chat as well to drop us any questions. We have a very comprehensive FAQ. Yeah, so if you're SME looking for funding, if it's just a small, if let's say you have not been served by the banks, you can't go to the banks because the banks say they unfortunately can't help you. We probably be an alternative option for businesses like yourself. For investors, like anyone above the age of 18 years old who wants to start saving and start investing, to start earning returns, you can always explore P2P. Of course, there's risk. Every investment has risk, right? So just make sure you understand the investment risk and go into it with eyes wide open.
Right. So thanks, Kelvin, for coming onto the show. Check out Fundaztic down below, and I'll see you in the next episode.
Thank you.